Hey, listeners, welcome back to the ValueHunt podcast. And today I'm truly excited to be here with Ryan Goepel. He's the CFO and president of Global Crossing Airlines. And this is a very interesting company. I've been researching this one for the last couple of weeks. And yeah, definitely some interesting questions in here that Ryan will hopefully answer. And so, yeah, Ryan, why don't you say a couple of words before we jump into the questions, and maybe you can give a short introduction for the ones that might not be familiar with the Global Crossing.
Yeah, like I said, my name's Ryan Goepel. I'm the president and CFO. I've been here since the beginning, so I was the first in hire. I've pretty much seen us evolve from a PowerPoint presentation into a real company, which has been a fun process. Basically, what we do is we provide charter services, which means we charter entire planes. We don't sell tickets. And what you'll hear today is how different we are from the traditional airline business model. And really what that means is as far as risk mitigation and opportunities for what we do, which I think is pretty unique in the space. And it's very unique to be available on a public market. Most airlines our size, most airlines of our type that do this service are not available publicly. So I'm excited to explain the story.
Nice, perfect. So my first question goes right into the beginnings of Global Crossing Airlines, which I will call JET for the rest of the interview, which is the
Sure.
ticker symbol, because otherwise we'll spend half of the interview saying the name.
Sure.
So why did you start JET despite the negative connotation of the airline business and all of that? And you also quoted Buffett quite a lot in some previous interviews, so I'm sure you know that he's talked a lot about the airline business and how capital destructive it can be. So
Sure.
yeah, maybe a bit of color on that would be interesting.
Yeah, and I think the Buffett quote is a little dated. I think airlines have demonstrated when run properly, they can actually do quite well. But I think with Global Crossing or with Jet and what we saw was a niche in the market in the United States that was being underserved. The charter market is very different than a scheduled carrier. It's not a ULCC, which is like a low cost carrier. It's not like the classic carriers like Delta and United, which are what we call scheduled carriers, or ACMI. And what ACMI does is we really address the gaps that the scheduled and the big guys can address or don't address for a customer base that needs our services. And basically what our services are, if you need to move 100 to 200 people on a specific time and place, that's the service we can provide. We saw that it was a poorly served market in the United States. The people who were serving it were in a very fragmented, using very, very old aircraft. And so we thought using the Airbus aircraft, midlife aircraft, which we have, 15 to 18 years, there was a very large market. We could go address a customer need that was there and do it in a way that we could build a nice market for us inside the United States.
Okay, perfect. But I'm curious, like, what motivated you as a person to start in this business? Because every business is hard, but this is especially hard. So what gave you that conviction or motivation to say, okay, let's go and do this?
Well, it's interesting. So I was hired on February 14th of 2020. So if you think back in the world of aviation at the time that was, I've always, I started working in aviation probably about 3 to 4 years prior to that. Before that, I was in oil and gas. I'd always loved planes. And I think, I joke that this is the Hotel California of industries. Once you kind of get into aviation, you never want to leave it. It's hard to get out of. I think from my perspective, I love the 24-hour nature, 7-day-a-week nature of aviation. I've always been a fan of planes since I was a little kid. And I think when you look at what motivated me in this side is I really saw a gap in what was being provided in the U.S. And there was a real opportunity to create something that's really hard to create. Not many or what we call a 121 operator. And what that is that's the level of certification we have the FAA. It's really hard and really rare to start one of these from scratch. And to be able to be a part of something like that was just, for me, really exciting.
Okay, perfect. So your business depends on ACMI, as you referred. Maybe you could also explain a bit more what this is for people that might not be familiar. So ACMI, charter demand. How cyclical is it really, and what happens in a recession, for example?
So, ACMI stands for Aircraft Crew Maintenance and Insurance. So when we'll charter out an aircraft on two contract types. ACMI is just Aircraft Crew Maintenance and Insurance, or we'll do it on full charter. And if it's on full charter, that would include fuel, ground handling, airport fees, and that's usually on a pass-through basis. So whether the question is, so it does depend on ACMI demand, and yes, there is cyclicality in it. But the great thing about aircraft is they can move. So what our aircraft do is they move to where the demand is at the different points of the season. And that's kind of how we're different than a scheduled carrier. A scheduled carrier, once they establish a market with their aircraft, that's their market. It's a beachhead. They invest in it, and they're going to fly that market, New York to LA, no matter what the season. How we're different is we'll say New York and LA is super busy for 2 months a year. We'll work for another airline and just fly for those 2 months. And then we'll redeploy the aircraft somewhere else. So we can redeploy the aircraft to other parts of the US, anywhere in the world, really, and to different customers based on when their peak demand is. So what we really do is we supplement peak demand periods around the world for different kind of aircraft, different kind of airlines.
Got it. So going back to like recession type questions,
Sure.
how much does your fleet financing? How much of your fleet financing is at variable rates, and how exposed are you to rising interest rates?
We're not very exposed. I think inherently leasing rates will be tied. Hurdle rates for the lessors will be tied to interest rates, but we're not explicitly tied to interest rates. None of our debt is variable. But I think as interest rates have risen, you've seen lease rates have gone up, and that makes sense because they're looking for returns above the risk-free rate. So we're not directly exposed, but there is kind of a tangential exposure in the form of lease rates.
Got it. And also on rental, I've noticed that rent paid per plane isn't a stable figure. Sure. Why is that? And on average, how much do you pay in rent per plane? I have it around 3 million USD per annum. So yeah, just wanted to fact check that.
Right. So with any aircraft we lease, there's two kinds of rent. There's fixed rent, and then there's supplemental rent. The fixed rent is what we pay every month, and that's anywhere from $150 to $230 a month per aircraft. And then there's a variable rent, which we would call supplemental rent, which is basically maintenance reserves that we pay in, and that's on a per hour basis. So that fluctuates with how many hours the aircraft flies, and that can be anywhere from $500 to $1,000 an hour. So you just really have to look at how many hours, and if we fly 150 hours, that'd be another 150,000. So all in rents would probably be, as you mentioned, the 3 million, between 300 and 400,000 a month between the fixed and the variable rent per month.
Okay, got it. Yeah, that makes a lot of sense. So how much Capex goes into maintenance versus growth? Because this is also a very important factor in your business model, because you're growing so fast, but at the same time, you have high maintenance kind of events throughout the year. So
yeah. And so when we look at the maintenance Capex, it's generally, right now running between 1 and 1.5 million a quarter on the maintenance Capex side. And that's parts, when planes. Here's the thing people don't realize about big planes is when a part shows it's not working, no one tries to fix it on the plane. They just take it off and replace it. And then you send it off to a repair shop, and they either repair it or they tell you it's beyond economic repair and you expense it. So that's the maintenance Capex side. The actual Capex because we've 100% leased, has really been in the form of deposits. So each aircraft we get is usually about 3 months rent on deposit. So that's anywhere from $600 to $1 million in rent per aircraft we take on board. And as we look to purchase aircraft, you'll see more of it. You'll see that might increase as well. But that's kind of so right now, it all depends on how many aircraft we're taking delivery of on the mix.
Okay. But the 1.5 million is, say, like regular maintenance. So you on your annual report, you explain like these different type of maintenance events, and there are some that are like you have to do it every 3 years, 6 years, whatever. So on is that an average, even including those bigger maintenance, or is just like
so with those bigger maintenance events, we're paying into a fund that's part of our supplemental rent. So like for example, with a 12-year, it's called a 12-year check. You would go in, and then you would go to the lessor and get funds out of what we've paid the lessor. The Capex would be if the 12-year check exceeds what you've paid into the lessor for that event, which we don't traditionally have a huge chunk. We haven't had a chunk of. We've managed to keep our checks underneath what we've paid into maintenance pools.
Okay. And also on unscheduled maintenance expenses, do you expect them to increase as a percentage of revenue over the next few years?
No.
If yes, why? And
no, you would expect them to kind of drop as a percentage of revenue, and the reason being, the good thing about planes is they're expensive. The bad things are expensive, right? So when you have a part that's $400,000 to replace, to spread that over the revenue from 5 planes is a lot different for 20 and 40 planes. So what will happen is it'll become less lumpy, and then it'll get more normalized as you get bigger. And so you can have a kind of a spike in maintenance expense in any one quarter, just given our size. But as we get bigger and as we add aircraft, and we've seen that, it becomes less material to the number. It becomes a more normalized. So that's why I'd expect it to drop.
Okay. Got it. This one is on the global pilot shortage and how will you staff enough crews for the planned fleet growth in the next few years?
Yeah, I think we got really reactive in probably 23 and overhired pilots more than we needed. And the pilots were all here before the planes did, which was a very expensive proposition. We kind of allowed our planes to catch up to our crew. And I think where we're at now is pretty good balance. We've been running classes and probably one a month since January to kind of anticipate what we have as we have a bunch of aircraft coming and we have a big summer flying schedule. So we're finding, the majors have slowed down their hiring dramatically in the U.S. So I would never say the pilot shortage is gone, but I think it's more normalized. And so, as a charter carrier, as not a major, we'll always be recruiting a different kind of pilot. So I would never say pilot recruiting is easy, but I think we are able to find the pilots we need and to operate the flights we need to operate.
Got it. Actually, one thing that stood out when I went through your presentations was that you always put this slide where you say like this pilot, Captain A or whatever, was on time 100% of the time, then 99%, whatever.
Sure.
So that's very unique as far as I'm concerned. So why do you do that? And do you actually incentivize them based on that?
Yeah, so one of the mantras here, and one of the things I've talked about a lot is there's a book called Good to Great, and in there they have a strategy, hedgehogs versus foxes. And when I got elevated president, I really kind of articulated to the team our hedgehog strategy. And one of those are, what are you passionate about? And one of the things as a company we're passionate about is what I call forgettable flights. We want to provide forgettable flights because no one remembers a flight that leaves on time and arrives on time and nothing happens during. And so we want our customers not to, because the only flights you remember, if you think about, hey, let me list the top 5 most memorable flights. None of them are good ones. They're always bad experiences. Yeah. And so we always try, and the best way to have a good experience on an aircraft is to leave on time. And what I call on-time performance is a culmination of everyone in the operation and in the company doing everything that needs to be done, the way it needs to be done, leading up to departure time. And so it's a real easy, not easy, but it's a metric that's easily tracked. Because you can say, what was the departure time and when do we leave? And one of the reasons we incentivize the pilots, the captains specifically, is the last hour of before departure, they have the most influence over whether that flight leaves on time. And so we believe in kind of posting it and sharing it and rewarding those who have a fantastic on-time departure level. Now, the balance of it was safety, obviously. We don't want anyone... And if there's a safety related item, it doesn't count against them, right? So we don't want a pilot to say, I got to go on time. Don't worry about blank light.
Yeah.
So that doesn't count in the metric for us. But it's more of a mindset of, hey, our customers expect to leave at 1. We're going to leave at 1. And what can we do to make sure that happens? Because that goes towards creating forgettable flights, which is what we want our customers to have. Because if they have a good experience with us, they come back.
Right. But what can actually the pilots do about leaving on time? Because I guess it's a lot of moving parts. They don't have the full control over that, right?
Well, so they have a lot of control. Like they'll know an hour before if all the crew isn't there. They'll know, hey, make sure the crew's on the phone. Do they have what they call it's a GenDeck? Do they have it's a document they need for international flights? Is the catering on board? Is the aircraft clean? Has the fueler showed up? There's a whole bunch of things that happen. Do they have their flight plan filed? Do they have the permits ready? So they'll know if they don't have X by 2 hours before, they need to call someone to get it versus going 15 minutes before departure time. Like, oh, I don't have the permit, or I don't have the flight plan, or I don't have the weight and bow. Like, there's all these little things that happen before departure time that the captain really does control. Now, there are a lot of things that are outside their control, and so we actually take that out of the calculus, right? So if it's weather, if it's ATC, if it's a mechanical, if it's those kind of items that are not inside their control, we don't count that against them.
Got it.
Otherwise,
Perfect.
it becomes a dismotivator because they're like, why bother? I couldn't. This isn't my fault. But there's a lot of things that are company controllable. And so we really want them to help us hold the company accountable for doing everything they need to do to make sure the flight leaves on time.
Perfect. Makes sense. Yeah, I had another question on lease rates of these aircrafts, and we've seen an upward trend in these rates. Are you able to pass these costs to customers, or will margins compress? And more generally, how capable are you of, say, raising prices to pass on costs?
So I think when we talked about our Q1, we talked about our charter rates, and ACMI rates have increased, I think, approximately on average a little under 7 or 8%. So there is some ability to pass on the cost, but there's a responsibility on our part of making sure we pay the right price for an aircraft and we get the right aircraft. Just like a car, the older the aircraft, the lower the rate is generally, and the younger the aircraft, the higher the rate. And so what we have to do is make sure, and we have made sure, we maintain a discipline and not necessarily getting, if the price of the aircraft lease is too high for us to pass through, or it doesn't make sense for our business model, we would forsake growth for a higher rate. And we think that discipline has been really important because the lease rates are cyclical. They go up and they go down. And I think what we've seen is a little more measured growth rate for us, even though still significant. And that's because we just haven't taken any aircraft at any price. We've been pretty disciplined on what rate we'll pay because we know how much we can pass on, how much pricing power there really is. And there's no ups, and committing ourselves to a lease rate that goes very into 6-7 years in the future at what we might consider a higher than normal rate will probably be an albatross for us in the long term. So we've tried to maintain that discipline as rates have gone up.
Perfect. And now that you're starting to talk about maybe acquiring aircrafts in the future, what's your hurdle rate for buying one versus leasing a new plane? And what kind of payback do you expect on like these acquired aircrafts?
So generally, we're initially targeting aircraft we've currently leased. So it's really easy for us to model. Okay, what would the return be if we leased it versus bought it? And really, the nature of the way the maintenance reserves and the way the accounting treatment goes, we've talked about. We figure every aircraft we purchase versus leasing right now is an incremental 3 to 4 million of EBITDA per year. And so if you're looking at which is pretty significant for us, especially when you look at valuation as a public company. And so that's kind of, as long as the price is right, like we're not going to overpay for an aircraft. Again, having the discipline of paying the wrong price if you pay the wrong price for an aircraft, there's no metric that's going to fix that. And so I think we've kind of got a discipline there about what is our earnings, what's the pro forma earnings leasing, and what's the pro forma earnings of buying. And we generally see it's advantageous to purchase. It allows us to build and strengthen our balance sheet, which I think makes a ton of sense. There's a lot of operational benefits of owning versus leasing. For example, if there's a slowdown, it's not it's not as hard fall to the cash flow if you're not as busy. So I think our focus is generally on, okay, can we find economic terms that make sense for us to purchase versus lease, and really focus on that for right now.
Perfect. So also, how do you measure your success internally? Is it EBITDA margins, return on capital, free cash flow? Because you mentioned in a previous interview that obviously you generate more EBITDA, and you mentioned on this one, if you acquire these aircrafts, but the returns on capital would be lower, right? So
Right.
I'm guessing you want to strike a balance, but overall, what's the preferred metric?
So I've always liked return on capital employed. Unfortunately, the market doesn't care about that. Really, if you
Mm-hmm.
look at, there is no return on, when you think about, and that's really more of a private company metric when you think about it. And so when you look at our return on capital employed, it's some of the highest in aviation because all our aircraft are leased.
Right.
But if you look at kind of our share price, the market doesn't reward you for that. It really doesn't.
Mm-hmm.
When we think about metrics internally, for the team, I try and have them focus on things they have more control over, like how many hours per aircraft per month are we flying, and what's your average rate per hour. Those are things the team can control, and I have that focused internally. I think financial metrics, ultimately, it's net income. There's EBITDA, EBIT, net income, and cash flow from operations are the things that matter the most to me. And so
Mm-hmm.
I think those are the metrics that matter the most to me. I think the public markets value us on EBITDA, but we're trading at such a discount to our peers. I think that it's tough to understand what investors are truly looking for and how they value us. So what we will do is, if we can make more money and continue our growth pattern and become more profitable, eventually the metrics that everyone uses to evaluate airlines will start to come into effect, and that's hugely accretive for us if we start getting that credit.
Correct. You mentioned the word peers, and actually, I want to get into competition a bit because I feel like it's a very important part of the equation. So some big competitors of yours have been taken private.
Yep.
So I'm wondering whether Jet has received any interest from bigger airlines or private equity to acquire it, and whether that would be like a door that you leave open, or you want to just go on your own.
I don't think you can ever close a door like that.
Mm-hmm.
It's at a certain price, everyone's for sale.
Yeah.
Um, uh, you know, do I take meetings with private equity and other operators all the time? Has anything materialized to the point of disclosure? Absolutely not. So I think from our perspective, that's kind of beyond our control, other people's interest in us. So what we do is we focus on what's our business plan, what's our growth plan, and how do we execute on that. And the other stuff is just kind of noise. But it's a small business, it's a small market, believe it or not. It's not a ton of players. Everyone kind of knows each other. Everyone kind of knows what everyone else is doing. And so obviously we get the attention of them, but nothing that's worth talking about, to be honest.
Got it, got it. And these aren't in the questions that I prepare, but if you had like um, really to compare yourself or benchmark yourself against a competitor that is publicly listed, which one would it be? Because I couldn't find really anyone that was a good comparable. So
Yeah,
yeah,
yeah.
maybe you can help me out.
Everyone who's a comparable to us is kind of different in some way. I think
Mm-hmm.
Avia Solutions Group, which is out of Europe, they don't trade as a stock, but they have public debt, so they release their finances.
Mm-hmm.
They have the same business model. Now they've got a little more vertically integrated with an MRO, like a maintenance facility and a training group. But when you look at the ACMI business, there's comps there, but again, there's no public share price, so that's tough to follow. In the U.S., the closest is probably Sun Country, but
Mm-hmm.
they have the caveat of a chunk of their business is scheduled service, which is not us. Like they have
Mm-hmm.
freight through Amazon, they have the charter, which is just like us, and then they have scheduled service, which is nothing like us. And then you have Allegiant, which is kind of all scheduled service. So there is no real direct comparisons. There's proxies in a sort of way, which kind of goes to the conversation that most companies like us are private. Most companies like us aren't available for the public investor, especially at our stage. You saw two big players, Atlas and ATSG, both get taken private in the last 12 months, and they have a very
Yeah.
similar business model, but with wide body jets. And they're a lot bigger, 100 plus aircraft. So it's tough to find a direct comp, and so you find comp likes out there that we use to try and value us.
What kind of EBITDA multiple are these companies being taken private? Because usually they pay a bit of a premium, right, on the public price.
Yeah, so I don't know the exact EBITDA multiple. I'd leave that but I know most of the peers kind of trade in the 4 to 6x EBITDA ratio kind of range.
Mm-hmm.
I know there's one research report on FactSet that shows kind of the averages and the comps, and it's a significant multiple higher than what we're trading at today. Is the best way I look at it. It's so far higher than where we're at today. I'm kind of like, that would be great if I was in the range anywhere of those multiples.
Right. And also, maybe I would like to ask you which one is the. It doesn't have to be like necessarily an airline or something, but which business model do you admire the most, or you try to like model from or learn from and apply into Jet's business?
That's a really good question. I think, my background was oil field services,
Mm-hmm.
and there's a lot of similarity and construction, oil field construction. There's a lot of similarities in that business model to what we do in the sense of it's heavy equipment. It operates 27 hours a day. It's all about the utilization of the asset. And I think anyone who charges kind of by the hour, like it could be accounting firms, engineering firms, there's a similarity. We're more of a service company than we are like an airline.
Mm-hmm.
And so trying to see how metrics and learnings from those kind of businesses really apply to us, because it really becomes, our profit. If we have three assets to our business, right? The first asset is our certifications, which works as a significant barrier to entry and a license to allow us to operate in multiple markets. Our second asset is our aircraft, which is obvious, and our third assets are our crews. And really comes down to our ability to make money is tied to how efficiently do we utilize both the aircraft and the crews. And if we can operate those efficiently at a proper amount of hours per month, then we'll make money. And it's very accretive.
Mm-hmm.
It's very cash flow positive, and it's a great business. And so I think we kind of look at businesses and industries that have heavy equipment that operate by the hour. And oilfield services is one. Cruise ships are another. There's various industries and various businesses that are very similar to what we do, that all have an ability to help kind of teach us. Obviously coming up through the finance and economics, everything's a widget to us, and so you just figure out how the business makes money, and then you figure out how to optimize that.
Correct. Actually, when you talk about oil, I reminded of oil drilling, and they have like this metric called white space. And in your annual report, you mentioned that Q1 and Q4 are usually softer, on the softer side. So I'm wondering whether it's softer because you charge less, because you are less able to charge a premium because there's less demand, or is it white space in the oil drilling type
Sure.
sense?
Well, it's funny, and that's probably why we do a white space report every day for when aircraft don't have something booked on them. And I guess that's where that must be where I brought that
Yeah.
up from. Thank you for that. I think on any given month, like I said, our aircraft go to where the customers are. And so there's transition periods of when different customers are busy. And there's certain months like January, April, September that we call kind of bridge transition months, where we go from like heavy flying to college sports or back and forth, where the demand is a little bit it's not as much obvious demand. So we kind of really have to hustle and make sure we have the planes fully utilized. So I think it's just a nature of where our customers are. And so part of our growth pattern and our strategy is to find balance across all the months and all the quarters to ensure we know where our planes are going to be and who they're going to fly for. And there's certain things like the summer is really busy with other airlines and tourists and travel because of the summer travel period. Q4 is actually really busy on freight, right? Because of the, you think about Christmas and packages and all that kind of stuff. Q1's really busy with college sports. So there's different parts of our business are busy at every time of the year. And it's making sure we allocate the assets to the right amount of assets to the right customer type at the right time of year. And that's kind of the balancing act. When you're smaller, it's tougher because when you only have 5 planes, there's only so much you can do. As you get to 20, 25, and 30, that becomes a much more strategic decision.
Perfect. And going back to competitors, I have one important question. So you mentioned in some of the last presentations and earnings calls that your largest competitor filed for Chapter 11 or bankruptcy.
Sure.
So curious to know what were the reasons behind that, and how are you planning to, say, capture the market share that competitor left in the market, I guess?
So the competitor in question, they had a different kind of aircraft, and their
Hmm.
average age of their aircraft was well into the mid 30s, so 32 to 35-year-old aircraft. And to be honest, that's the opportunity we saw. When you operate with older aircraft, they're less fuel efficient, they're less reliable. You can and really that can damage your reputation for reliability and the
Right.
quality of service. So we saw the opportunity for younger aircraft, more fuel efficient aircraft, to go capture market from that client base, which we did. I think ultimately that customer had a lot of debt. I think you can look up the filings, but it was probably 20x our debt, 20 or 30x our debt, which isn't a great number. And they didn't really reinvest in younger aircraft. And as their aircraft aged out, our ability to win the work grew, and it eventually didn't work out for them.
Mhm.
As far as capturing the market, I think we've done a really good job of capturing what's been available and out there, uh, and we continue to do so every day.
Perfect. Actually, a question I have for you is, how do you source new business? Because, say, okay, I'm a sports team, college sports team, and I want this service. Like, how do I find out about you? How does the typical customer journey process look like for?
Yeah, so
I know
we're
you have different customers, but
sure. Yeah, we're truly a B2B business. So an individual rarely has the wherewithal or the need for an aircraft our size, and so
Mhm.
college sports and teams, they'll go through brokers generally. There's
Mm.
brokers they have relationships with, and really, there's only 3 or 4 airlines who can do what we do. So it's not hard to find us, and it's not
Mhm.
hard to figure out who can do it. With working with other airlines, it's just personal relationships. Again, there's only two or three. There's really only one flag carrier, which is us, that allows us to fly for other airlines in the U.S. Internationally. Um, you know, we know every airline that subservices aircraft like us, so we've established relationships. It's direct. It's a classic B2B. So we have a sales team
Mhm.
um, that not only fields inbound requests but also proactively goes out and establishes relationships. Because a lot of times when people need us, it's when the plane breaks down or they've got a maintenance event and they need a rescue, and and it always happens at 2 in the morning on a weekend. Always, it seems. And
Mhm.
so you have to have the relationships in place before then in order to effectively do that.
It sounds like you had an event of those recently because you
Every
talk
weekend,
vividly.
it's all the time. But that's the fun part. That's the fun part. This is why we love this place.
Yeah, right, right. Okay. So in the previous presentations, you mentioned there's this plan of increasing the fleet by 20% in 2025.
Yeah.
Can you explain to us how this will increase revenue per blocked hour and total blocked hours? Because it seems that it's non-linear when you increase the number of aircraft. Like, it doesn't necessarily grow 20% in revenue. Maybe it's more because scale effects or whatever. So.
Yeah. Yeah, it's not, so the reality is when you add aircraft, you have more capacity to sell and you operate more hours. If you operate more hours, it won't necessarily impact the revenue per hour just because it depends on where it goes, right? And keep in mind, an ACMI rate per hour is different from a charter rate because the charter rate includes fuel and ground handling. So it's an ACMI hour, or charter hour is probably almost 3x our ACMI hour. So that's
Mhm.
kind of skews it sometimes. But by adding aircraft, you have more capacity to sell. And if we can take our average revenue per hour and we take our average aircraft utilization, you should be able to back into pretty clearly how much more revenue it's going to generate. And we're kind of at that tipping point of scale where the vast majority of that revenue drops to the bottom.
Okay. Yeah. Yeah. One thing I noted when kind of trying to model your financial is that the amount of operational leverage is huge. Like, because you
Yeah.
have these huge fixed costs and rent and all that, but all of a sudden, like, if revenue increases just a little bit, then all of a sudden the picture is way different. So,
Yes.
um, very very interesting to note that. Um, Long term, what sort of EBITDA margins are we looking at? Like, when Jet's profile matures a bit more,
Sure.
and we have seen the full scale effect of the scale of the business and operational leverage.
So I think, as a long term, we're a long way from maturity, very long way. On an EBITDA margin on a fully leased fleet, which is what we are, is probably low teens. But I think if we transition to more of a 50-50 ownership, you probably see high teens, because the aircraft cost would flow through depreciation and amortization. And ultimately, if you owned 100% of your fleet, your EBITDA and EBITDAR would match, right? So that would be, and that's
exactly.
really your kind of that's kind of your indicative kind of rate. So low teens, mature, low teens, but high teens, maybe low 20s on a fully owned fleet. You just look at our EBITDA margin to see what it looked like fully owned.
Okay. So liquidity and working capital management is a well-known challenge of the aircraft business. So
Sure.
I'm curious to know how you're navigating these challenges in a successful way, and what sort of debt, let's say, hurdles you have of, okay, we're not going past that or something.
So, the reality is, and this is one of the nuances of an ACMI business, right? With a scheduled carrier, you have both. Once you set your schedule, 97% of your costs are fixed, and you've got to fly it no matter whether you make enough money or not. With ACMI, you don't fly unless you're contracted. So every one of our flights makes money. We don't fly unless we're paid, right? So, we tend to have, now with some of our customers, we get paid in arrears, but it's like a week in arrears, not much. So I think from a working capital standpoint, we can operate with a lot less than a scheduled carrier. Our cash flows, we can manage a lot better than a scheduled carrier. And so I think from that perspective, while it looks kind of not ideal, we have a lot more levers that we can do as an ACMI charter operator than a scheduled, because we have a lot less risk to manage, right? So we're not fronting fuel, we're not fronting a lot of these costs, and we're not flying aircraft flights that lose money, because every flight makes money, and every additional flight makes us more money as the fixed cost gets covered.
Right, correct. Actually, there was this analyst that asked you on working capital last quarter on the earnings call, and I don't understand why some people view negative working capital as something bad, because if you look at Costco or other businesses that basically get paid upfront, they all have negative working capital, and that's actually good because it's a form of leverage, right? So,
I think it's just it's a form of leverage, and it's the design. Like if you look at the biggest chunk of of what's driving our negative working capital, it's the current portion of lease payments, right? So it's the next 12 months of lease payments, but you'd expect to have that covered for it. So I think if you back that out, it's not nearly as I don't know what's ugly. But you're right. It's a feature of the business as well. Like we get to lever on that side as well.
Yeah, correct. So obviously last quarter and Q3 in 2024 was where we saw the first kind of inflection in profitability. You've mentioned investors have been pushing for it for a while, and that's also why you pulled the levers to be profitable. But I'm just curious to know, what levers are you pushing? What's causing that inflection, and how sustainable is that over time? And if you plan to grow it or just keep it at a decent level so you can invest more in growth?
So we do reinvest a lot into growth. We're reinvesting in pilot hiring, we're reinvesting in aircraft growth. But we're also trying to, stay within, I think what was happening to us before is we were focused. We weren't super focused. We were doing too many things at the same time. We've really refocused the business on what makes us money and what is our core business, which is narrow body charters. Just keep it that simple. And I think that's been one of the main. It's kind of a discipline to just focus on what we do and to achieve scale, and then have cost controls, because it's really easy to hire too many people too fast. It's really easy to commit. It's really easy to spend money, harder to make it. That's the best way to put it. And so it's having the discipline on making sure we're spending when the aircraft are here, when we know the aircraft are here and the revenue's here, and kind of grow with our revenue and not grow ahead of the revenue. Because again, it's really easy to spend money. It's harder to make it. And I think that we've gotten a lot more transparent and a lot more. I think one of the biggest levers is holding more people further down in the organization accountable for it, where they're actually spending the money, and really having a discipline around budgets. It's what a mature company does. Is you have discipline around targets, around budgets, around hours, and you put controls around spending and who can and who cannot, and really formalize those in a way that allow you to really Because from my perspective, I've got a group that's trying to grow the top and then manage the middle, and that ends up with a better number on the bottom.
Got it. Yeah, that's very interesting. So we graduated from more specific technical questions on the company itself. I'm curious to know a bit more about you and your background and all that. So, yeah, just what kind of mistakes have you made as an executive in the past, and how do you address them and learn from them, I guess?
Too many to count. I think I was taught by one of my executives. I remember, certain people say things and they stick with you, and this stuck with me is you're going to get 50% of your decisions wrong, regardless of how long you spend on them and how much you analyze them. So the trick is not to worry about getting every decision right. The trick is to make as many decisions as possible. And so, for example, if you ponder all day and you only make 2 decisions and you get 50% wrong, that means you only got 1 right. But if you make 50 decisions in a day, that means you get 50% wrong. You get 25 right. So it's always have an open mind. Never have don't dwell on it. Just because you made a decision in the past, don't think, okay, I did that, I can't revisit it, or I can't, with new information, you can correct it. So I think it's always to be cognizant of what's going on, be aware of what your business is doing, and constantly be moving forward and making decisions, and don't just because a no decision is a decision. And that's usually the worst thing for a business is a whole. You start to realize when you make decisions how many pieces get moved in line, and if they're all waiting for a decision, that's actually the most destructive thing.
Got it. Yeah. The next one is actually, how does it feel to be CFO in a public company? Because I guess it's a whole different job from being a CFO in a private company, which
Sure.
you were previously used to. So, yeah.
I think it's overrated is probably the first way I put it. But the public nature of it is you just have a lot more eyes fact checking you and holding you accountable for everything you do. And there's a certain discipline that comes with a public company where you have to, every quarter you've got to get your numbers out, and every quarter you've got a lot of people looking at it, and you have to be accountable for it. And it's easier in a public company in the sense you can just push that out a bit. I think being public forces you to be more disciplined, and it forces you to be more accountable. And so you kind of, I've been in this role now since we started in June of 20. We were public as of June of 2020. So it's almost 5 years now of having to be held accountable for what I say, deliver for what when you say something, people remind you of what you said. So it's probably made me a little more cautious about outlooks. But it's a good exercise in making sure you check where you are every month and where you are every quarter relative to what you said, where you said you would be. And that's pressure. There's probably a lot more pressure that way. But that's kind of the fun part of the job, because when you meet it and you meet expectations or you exceed it, that's the best. And I think that's what we always continually strive for.
Nice. Perfect. Now this question, obviously you can answer it or not, but if you had to invest in a company in your industry that isn't Jet or Global Crossing, who would it be and why?
I think I said you look at on the scheduled guys, there's not really a lot of people who do what we do in our business, but I've been always really impressed with the United team and where they've gotten to and how they've managed to differentiate themselves amongst the scheduled carriers. I think Sun Country, they do what they do really well, and so I think those are two that I would look at.
Okay, perfect.
Well, after they looked at ours, but that's a given.
Yeah. So, what motivates you in your role as president and CFO in Global Crossing? And when you wake up in the morning, what makes you excited?
I call it the what if. What if we can do this? What if we can pull this off? I find that really motivating, because not a lot of people have been able to do what we've done. And I think that's something that motivates the whole team, we're already probably the largest charter operator in North America that does pure charter. We operate the most amount of block hours. What if we can grow this to 50 to 100 aircraft? How would we do it? It's the challenge of that is kind of what motivates me. Because, as a I've also been kind of a fan of, there's a lot of books where you read about the history of aviation, and being part of that history is really cool. And so, but in order to be a good part, you got to survive, and you have to have a business model that. I don't want to be that chapter about one of those chapters about one of the ones that didn't make it. I want to be with a chapter that's about what if this team did make it, they did it differently. They found a different segment in aviation. And, we joke, we call it the global coaster around here, the ups and downs of every day, how you manage that every day. But I'd like to be a chapter in that book that we pulled it off. And that's really motivates me.
Nice. Perfect. And to that point of maybe not being in the good chapter, what do you fear?
Well, we're aviation, right? And so, the first thing we think about every day is safety, and the safety of our passengers, the safety of the operation. And so, what keeps everyone up at night is making sure we have, and everything we do, we do everything through that lens first, right? What we do is hard, what we do is challenging, and what we want to do is in a safe way. Because that's just what we have to do. You don't have a choice on that side. So I think, you don't necessarily fear it, but it keeps you up at night. And then, and I think that's the thing we think about the most.
Perfect. Yeah. So I have 3 questions left. And the first one is, who are your role models and why is that?
I think for me, role models would be, I'm always impressed with the people who kind of who just get it done quietly and take care of their business. I don't, whether it's single parents or people with difficult jobs or difficult situations, whether they're dealing with something medical, whether they're dealing with something personal. I've been fortunate to meet a lot of people in my life who've been going through that stuff, and they just quietly go about their business and take care of it. And so those are the people I kind of admire, their ability to just persevere in the face of what is difficult stuff. And usually they're not famous. They're everyday. They're people who just deal with everyday stuff. And I think those are the ones I aspire to kind of emulate more so than anyone famous, like a president or something like that. I think I can't relate to those lives. And so those aren't necessarily role models to me.
Right. Makes a lot of sense. And actually is a very unique answer, because usually what comes to mind is it's obviously either famous people or people that really achieve something that you like in your field or you admire. Too often we forget about those simple, let's say, more, as I said, day-to-day stuff that are really admirable. So yeah, thank you for that reminder. And next question is, what do you enjoy doing outside of work?
Well, speaking of, struggle, I have 2 young kids, and so I know I'm in that window where they still like me. So I enjoy spending as much time as I can while they still like me. So that means a lot of going to theater. It means going to soccer practices and soccer games. And really the fun part is sort of exploring the world through their eyes, like national parks and taking them to new cities. I've always been an avid traveler, which is great. I'm in aviation. And they're at the age now where they can travel and they're fun to travel with. And so every opportunity we can to take them to a new city or to see a mountain or a beach or Europe or any of those kind of places. That's what I want to do, and I enjoy doing the most.
Nice, perfect. Yeah, you should really take advantage of that time where they still like you.
Yeah, there's a point where they will not, and then they'll come back. So I'm going to take advantage of the part where they still do.
Yeah, exactly. So last question, just to wrap up. How often do you check the company's stock price?
I probably see it every day because it just kind of pops up. It's more out of a curiosity than anything. I'm always curious to see how many shares are traded and when it moves. We don't really do anything about it. It's just more of a curiosity. When you're small like this, you're always seeking kind of relevance, to be relevant. Sorry. And we're always kind of, what was today the day that people have noticed us? Is today the day we finally get the recognition for everything we've created? And generally the answer is no, but that's the nature of small companies. So it's more of a curiosity than it is something that's an obsessive, like, oh my God, the price is at this. And my emotions don't swing with it. It's more of a, oh, okay, that's interesting. Just because it's almost like a public scorecard for us, especially as
Yeah.
a small company. And I do a lot of conversations like this. I talk to a lot of investors, and it's the only real feedback I get to whether those conversations were good or bad, or whether I got through to someone or not. Is really, that's the scorecard, and whether we like it or not, that as a public company, that's your scorecard.
Perfect. Yeah. So I think you were very insightful today. I hope people also like the conversation and learn a bit more about Jet and Global Crossing Airlines. So yeah, just wanted to thank you a lot for taking the time. And if you want to come back at any point and share with us some interesting updates, yeah, just let me know.
That'd be great.